Welcome back, ladies and gentlemen. It's Benedict here again from Jagan Company Associates, and I want us to move on with the ledger. Now we are on sales ledger control account. So what do we mean by sales ledger control account? So we are saying here that sales ledger control account is a summary account. It is a summary account which checks the arithmetical accuracy of the sales ledger. So we had talked about the sales ledger containing all the details of sales, whether they are in cash or credit. And the sales ledger is also capturing the amount that has been paid for the sales that you've done to our customers. But now again here we are saying that a sales ledger control account is a summary account which checks the arithmetical accuracy of the sales ledger. Simply put, we are saying that the sales ledger control account it will add, or rather we will add all the individual accounts balances. We will add all the individual sales. We will add all the individual discount allowed. We'll add all the individual sales return, and also all those summations we'll put them in a sales ledger control account. So for example, we'll be having sales return for customer A, B, C, and D. We'll also have credit sales for customer A, B, C, and D. And then we'll also have a discount allowed for customer A, B, C, and D. We could be having refunds for customer A, B, and C. So all these details, will sum them up, the sales return, the credit sales, the discount allowed. We'll sum them up from the individual accounts, and then we'll put them in a sales ledger control account. So it is a summary account which checks the arithmetical accuracy sales ledger. So whatever we put in the sales ledger control account, the due balances within the sales ledger control account will compare them with what we have in our sales ledger. So it has to tie with the sales ledger. So that's when we'll say that sales ledger is arithmetically correct as compared to the sales ledger control account. And then again, we are saying that the sales ledger control account enables us to see at a glance whether the general ledger balance for the sales ledger agrees with the total of all the individual trade receivable accounts held in the sales ledger. So that's what we just explained. And then down here we are saying that sales ledger control account is a replica of individual trade receivable account, but instead of containing transactions related to one trade receivable account, it contains transactions related to all trade receivable in the business. So all the transactions within each and every individual data will be totaled, put in sales ledger control account. So it's a summary of all the individual trade receivables within a business. So again, you are saying that the sales ledger control account is generally prepared at the end of a financial period, or whenever it is required to check the arithmetical accuracy of the individual trade receivables accounts. So let me just first show you how the sales ledger control account looks like. So here is the sales ledger control account. We have the debit side, and we also have the credit side. So the debit side will include all the credit sales. It will include all the dishonored checks, those checks that the customer has paid but the bank has dishonored. It will include the interest that we've charged on overdue balances. Maybe the customer was supposed to pay within 30 days, but he has gone beyond 30 days, so we need to charge the extra days that the customer has not paid. And then we also have bank or cash refunds receivables. And then on the right hand side, which is the credit side, we have balance brought down, we have cash and bank. So these are the amount paid by the customer. You also have discount allowed. So these are the discount we've allowed to our customer. So when the customer was supposed to pay 100,000, we give him a 10% discount. He'll be paying 900,000. So we also have sales returns, and then we had mentioned earlier that sales returns are those goods that the customer are returning back to our business for various reasons. Maybe the customer, the goods that we sold to the customer had some defects, so they have to return them back to our business. So we call those sales returns. And then we also have bad debts. So bad debts here we mean when the customer is not in a position to pay, or maybe the customer is dead, we cannot recover that amount, or the customer has been declared bankrupt, so there's nothing that we can do. You will not pay that amount that is due. So we call such kind of dues as bad debts because we will not recover them. Then here we also have set-offs. So when we talk about set-offs, we mean when the customer is also a supplier. So for example, the customers has supplied us with the raw materials. So these raw materials, we are using them to create goods that we are selling. So after the creation of those goods, or rather after the manufacturing of these goods, then we need to sell them customer, and then one of our customer will be one of the supplier. So when we sell them these goods on credit to the supplier, so the supplier will be having a credit, and then we'll also having a credit balance that we are supposed to pay the supplier. So here we'll just do a trade-off between the debt balance and the credit balance for the customer who is also the supplier. So this is what we call the set-off. So we'll net off the debit balance from the credit balance that we owe to the customer. And then you also have your balance carried down. So the balance is carried down. These are just the total amount of individual accounts balances that we have within our business. So this is all what we have about sales ledger. But again, somebody might ask you, what are the sources of information for sales ledger control account? Where do we get this information of the sales ledger control account? So like here now we have the balance carried down, or rather the balance brought down. So the balance brought down will be gotten from the previous balances of the individual account of debtors of the previous period. So let me just take you to my Excel workbook so that I can show you the source of information of sales ledger control account. So balances brought down or balances brought forward, whether debit or credit, and this will get them from the trade receivables of this year. I think that self-explanatory. Like for example, here now we are in January, and then the balances carried down for January will be, and the balances brought forward in February. That's why we are saying that the balances brought down will come from previous period balances. And then here you also have credit sales. So credit sales will come from our sales journal. So initially you had said that the sales journal will record all the credit sales. So when we want to get the information of credit sales, we'll just go to sales journal. Then we also have dishonored checks. Of course, this will get from the cash book. And then we have the interest charge. So this we must have recorded in our journal book, the general journal book of an unspecialized journal entries, like interest charge on overdue account. You might not be charging it every month or on every client, so there will just be a limited number. So this limited number of interest charge entries will book them in the general journal, or rather the journal book. So that's where we'll get that, or rather that's where we'll get that information. And then we also have here bank and cash refunds to receivables. Of course, this one will also get from cash book. And then on the credit side, we have cash and bank. So these are the cash and, or rather, these are the amount paid through cash or bank by our customers. And then we also have discount allowed. So discount allowed also will get from the cash book. And then we have sales return. And the sales return will get from the sales return journal or from the journal book. And then the bad debts, we explained what is meant by bad debts. And then the bad debts also will get that information from the journal. And then you will, of course, you also have set-offs, and this also will come from the journal. And then the balance is carried down, and this will get from the trade receivable balances of the current period. So that's all about sales control account. So in the next video, we'll do an illustration of how we need to capture entries in a sales ledger control account. Then we need to compare that with the amount that we have as balances within our sales ledger. So let's stop at that, and thanks a lot for watching. For those of you who have not subscribed, please just take a second or two to subscribe. And for those of you who subscribe, please thanks a lot for your support, and please share the information or the videos with your colleagues. So let's meet again in the next video.